You know that building that houses your local doctor's office? Well, there's a pretty good chance it just changed hands in one of the biggest healthcare property deals the UK has ever seen. Two absolute giants, Primary Health Properties and Assura, have merged. So today, we're going to explore what this massive new company means for investors and, maybe more importantly, for the future of where we all get our healthcare.
A transformational year, right? That's straight from the CEO of PHP. And believe me, that's not just some corporate buzzword. This wasn't just a simple merger. It was literally the creation of a £6 billion powerhouse in healthcare real estate. So let's unpack what that transformation actually looks like.
So here's how we're going to break it all down. First up, we'll look at just how big this new company really is. Then we'll dive into the financials, to see if bigger also means healthier. After that, we'll explore their three-point game plan for managing all this new scale. And finally, we'll get to the big question. Why does any of this actually matter to you?
Okay, let's get right into it. The first thing you need to grasp is the sheer scale of this new company. I mean, this wasn't just two businesses joining forces. It was the creation of the UK's undisputed #1 leader in healthcare property.
This little table here really tells the whole story. Just look at these numbers. In 1 year, the company's portfolio value more than doubled to a whopping £6 billion. The number of properties they own more than doubled to over 1,000. And their guaranteed annual income from rent, that shot up to $342 million. Seriously, this isn't just growth, it's a complete redefinition of their power in the market.
So, you might be wondering, what exactly is this healthcare REIT they've become? Well, it's actually pretty simple. Think of them as a highly specialized landlord, but for the healthcare industry. They own the physical buildings, like your local GP's office or that new community health hub, and they make their money by leasing them out, often with the government backing the rent.
All right, so the company is now absolutely massive, but is it financially healthy? Let's pop the hood and take a look at the key numbers to see how this newly combined business is actually performing.
First up is net rental income. This jumped to £230 million in 2025. You gotta understand, this figure is the lifeblood of the business. It's the actual cash that comes in from all those properties after paying direct expenses. And that huge jump, it shows the immediate financial muscle the merger brought to the table.
Now this next number, this is really crucial. Adjusted earnings per share actually went up by 4%. So why is that such a big deal? Well, it shows that even in the middle of this huge, incredibly complicated merger, the company got more efficient and more profitable on a per-share basis. For investors, that is a really powerful sign that this deal is creating actual value, not just size. And this is the story of reliability. The company just marked its 30th consecutive year of growing its dividend. 30 years! That's an incredible track record, especially in the world of real estate. It really just shows a stable, predictable business that consistently gives profits back to its shareholders, year in and year out, even through a period of massive, massive change.
Of course, a deal this big means taking on some serious debt. This chart shows what's called their loan-to-value ratio, which is just a fancy way of measuring their debt against the value of their buildings. And you can see it's kind of high right now, at 57%. So the big question becomes, what's the plan to get that number down?
So, imagine you're now in charge of a £6 billion company. The challenge is pretty clear. How do you manage this new scale and make sure the whole merger actually works out? Well, it turns out PHP has a very specific three-point game plan.
But before we get into their plan, let's quickly define a key term you hear all the time: synergies. In the business world, it's just this idea that 1 + 1 can equal more than 2. It's all about the cost savings you get from things like eliminating duplicated jobs, combining offices, and not needing 2 sets of lawyers and accountants anymore. And their plan is incredibly direct. Step 1, tackle that debt problem we just saw. Get the loan-to-value ratio back into that comfortable target range. Step 2, deliver on those synergies. Find £9 million in annual cost savings. And step 3, fully integrate the two companies by taking the best people and the best processes from both sides. Simple. And let me tell you, they are moving incredibly fast. This number right here shows they've already delivered £7.5 million of their £9 million synergy target. That's 83% of the goal, achieved in a really short amount of time. It proves they aren't just talking about a plan, they're actually executing it way ahead of schedule.
Okay, so we've seen the deal, we've looked at the numbers, and we've walked through the strategy. But why should anyone outside the financial world really care about any of this? This is where we connect all these corporate moves to a huge shift that's happening in our public health services right now.
So, the UK government has this 10-year plan for the NHS, and its main theme is moving healthcare out of those big centralized hospitals and into local communities. The big idea is to create these neighborhood health services that are basically one-stop shops. And here's the crucial part. The plan says, loud and clear, that private capital is going to be essential to build the modern facilities to make it all happen.
And this is where it all clicks into place. The government has a vision for the future of healthcare that needs a massive investment in new local buildings. And PHP, now much larger and with more financial firepower after its merger, is perfectly positioned to be the partner that builds, owns, and manages these community clinics of the future. Their whole business strategy lines up perfectly with this huge national healthcare priority.
So we'll end on this thought. Healthcare is moving out of the big hospitals and literally into our neighborhoods. This merger, it wasn't just about share prices or portfolio values. It was about positioning one single, powerful company to own the very buildings where we will all go to get that care for decades to come, which gives a pretty clear answer to the question, who's going to own the clinics of the future?